a couple of minutes early here. Welcome everybody to this webinar, the TradingView EXANTE webinar with Shaun Lee. That's Shaun that you can see on your cameras right there. My name is Stan. I'm the Chief Operations Officer of TradingView. I'll do the official intros like after we officially start. Yeah, right now we're just waiting a few more minutes for a few more people. So just for some pre-game banter, we're going to start with, I'll announce a few features from TradingView and a few things that we're doing. Then we'll intro our partner EXANTE. Everything should take 3 minutes each. Then we'll jump right into the meat of it with Shaun, who's going to talk about sort of common mistakes that traders fall into when they first start trading. And that's, for me, that's a very important thing. I'm not a trader, really. I'm a software entrepreneur. So trading is, I'll be happy to listen and learn the different tips and tricks that he's going to tell us about. And I think you could never know too many simple things, really. Shaun, what do you think?
Well, there's a whole web. I believe, from my experience, there's so many little dots and pointers that need to be connected in order to be, even have a little bit of a taste of profitability overall. There's many market participants as well. And I believe FX is a standalone market too for markets. And I'll go a little bit deeper into that later on as to why my preference is FX and some of the currency pairs as well. But yeah, even other market participants do make it harder for us to actually achieve consistency, and we've also got like the brokers and so on, and some of the mishaps, and many things people fall into with brokers, and even like comes down to data, charting software, strategies, and there's so many different things.
Well, obviously you got a lot of good stuff. Save it for the webinar when we actually start. So I'm just getting feedback from the audience here. Can you guys? Shaun sounded a little quiet there. Could you hear him?
I've got a headset here. Do you want me to try this headset, see if it's any clearer? Give me 1 moment.
Okay, say something.
1 second.
All right. So, Shaun, I don't know if you can see the dashboard for the go-to meeting or whatever we're doing, but there's questions.
Audio. How's that?
Okay, that is much better for me.
Okay.
How's it? Okay, yeah, people are saying it's better. Perfect. All right, so it seems like the bulk of the people are coming in. Just a few minutes ago, we had 60. Now we got 140.
140. Got some questions coming in here.
140, yeah. So we're going to have questions. We're going to have a QA session at the end of the webinar. I'll answer some questions. I'll monitor it as well. So if you got any TradingView questions.
By the way, this is recorded, right? The whole thing's going to be recorded?
Yes, typically they are. However, EXANTE takes care of it.
Okay, cool.
Can you guys see my screen? Am I sharing my screen?
I can see your screen fine.
Which screen can you see?
TradingView, basically the introduction.
Okay, I'm showing the blog.
Yeah.
Okay, cool. All right, well, I got 150 in. The webinar is starting now. We'll make sure that it's being recorded after I finish talking. We'll make sure we record it. Let's jump into it, not waste any more time. One more time, I'm Stan, co-founder and chief operations of TradingView. I'm reachable at founders@tradingview.com. If you guys have any business inquiries or partnership or ideas, send them my way, founders@tradingview.com. Today, we're happy to have Shaun Lee, one of our avid community members, with us. He's going to talk about common mistakes traders make or fall into when they first start their trading career paths. So, all right, audio is good, video is good. All right, we're off to the races. So a few announcements. If you guys, I'm not going to list all the new features that we release, but if you do want to know what TradingView is up to, always check blog.tradingview.com if you haven't checked it before. About once a week, we throw out some good ideas over there, some new features that we built, like notification types, Elliott waves, drawing things, locking cursors, little things that we improve on as we progress. So for new features, always check the blog. This is Shaun's profile, everything FX. So after the webinar, during the webinar, well, you should be listening during the webinar, but you can go there, follow him, private message him, check out some of his ideas. Absolutely awesome, worth a follow. This is one project I do want to mention to everybody. We are actively translating TradingView to pretty much every language in the world. And we're doing it. We need your help to do it. We've localized or translated the chart piece of it mostly, but as we add new stuff, we need more translators. Okay, so I'm just trying to zoom into this. Okay, this is, so we use web translated. So anybody that wants to help, anybody that knows the trading terminology in some other language other than English, can help contribute to this project and sort of leave their mark with the TradingView community. These are the languages that we currently have, and I'll show you graphically what the fill rate looks like. Okay, so this is the control page for the languages that we currently have. So the chart is filled in, but the rest of TradingView is not. It's a lot of text, right? So only with the help with our community can we make that happen sort of fast and accurate. So if you know any of these, if you want to help, if you want to contribute, or if your language is not on the list, email founders@tradingview.com, and we'll be happy to, to talk about how you guys can help, make TradingView better for everybody. Okay. So that was the main thing I want to talk about. I'm going to move this over to somebody from EXANTE. Maria has had a few troubles with her mic, but somebody from EXANTE is going to come in, maybe. I don't know if that's the plan, but anyway, EXANTE is our valued partner. They've been helping support TradingView and this community for quite some time now. If you have questions, you can post them in this QA over here. They're a great broker. Their services are well recommended from a bunch of people that use them. So if you want to check them out, please do so after the webinar or even right now. Just check out their website. You can do it by clicking the logo on the bottom left corner of your chart. So EXANTE is really, really good, and they help make this possible, just like you guys. So if there's no further questions or objections, we can dive into Shaun and hear his story. And I'll be here if there's anything that comes up. Shaun?
Yeah.
All right, thanks.
Yeah. Okay, welcome everybody. First of all, I'd like to give you an introduction to myself. For those good guys there's a lot of people who already know me here from Astrofx and the YouTube, etc. As mentioned, our TradingView is everything FX, and I try to keep updated with it to give some trade recommendations, some aspects of analysis ranging from long-term, medium-term, and even some intraday trades. It really depends on the market overall. Well, today's topic is mistakes and traps, common mistakes and traps that many traders fall into. And as many of you people know who are in this webinar, me and my business partner have been mentoring traders from completely new up until 5 to 7 years experience plus. And there's always that common trait of people who can't really achieve consistency. So I'm just going to show my screen anyway. I'm going to start jumping from charts and show you guys some analysis. I know today, for you followers, we were meant to do Technical Tuesdays. However, I am going to be making up for that and giving you some decent analysis and trade setups to go through with for the week ahead. So common mistakes and traps. First of all, introduction into my journey. I found trading, as many people do. Online, so many barriers, so many things to, as already mentioned, so many dots, so many pointers that need to be connected overall. And so with that being said, I opened my MetaTrader account And I made myself a folder. I said to myself, you know what, I'm going to nail this. It all looks foreign, very, very daunting at first, that blank MetaTrader chart with a black background. I'm sure many of you guys are familiar with that one. It took me about a month or so, but it took me 3 weeks plus to even just find out what a pip was, with so many confusing variables online. And I've done demo account for, let's say, 2 or 3 weeks and made some money overall. And then I thought, you know what, it's time for me to go live. I put all my savings into a live account. It's one of the, again, another very, very big mistake for newbie traders, is to get really, really confident. And you also must remember, much of the demo trading many people do is not even realistic. It's placing trades, leaving trades on no target, no stop loss, no analysis, no risk reward. And you come back and say, oh, look, I've doubled my account, tripled my account, I'm ready to go live. That's exactly what I did. First of all, I did some good trades. I probably, there was no strategy there. There was no real foundations, and I made 20–30% of my account. I got excited, as many people do, start to look at holidays online, what car you're going to buy, how to just nail life, and how you're going to achieve all your dreams at a rapid pace. And again, many people are often out there thinking of Forex as, they don't think of it as a business, which I'll get to later on with a few tips to help everybody. So yeah, not as a business. You want to just flip your account from 10K, 15, 20, etc. However, that's what I did. I got my 10K account to about 12.5, 13,000. Now with that, even with experienced traders as well, handling wins can sometimes be harder than actually handling your losses, because you get way too overconfident and so on. Again, I've got a good story for you guys later on about that, one of my personal experiences. And anyway, cut a long story short, I started to trade and I was going against the trend. I eventually lost my 2,500 profits, and then all that's going through my head psychologically, because many techniques that we share and many personal stories we share and strategies are always to try and keep your psychology balanced overall. So I lost my 2,500, and all I'm thinking about is, oh, I wish I withdrew that. What ifs, what could have been. And then the lot sizes start to increase. I know many people can probably relate to this, and I've seen it in many traits of our students as well, that when you take a hit, all you want to now do is you're now glued to the computer. You don't want to take time away, and you're trying to get your money back, which, overall, you never withdrew anyway, and then it's a spiral. It can be a spiral. And then emotional trading comes forth also. So that was one of my first experiences in the market. My 10K went to 12.5, 13, and all the way down to $300, and then just got completely margin called overall. So I knew at that point it was a fork in the road, make or break decision as to, am I going to carry on with Forex, or am I now going to become one of the losers and the statistics overall? And 4 years later, believe it or not, I am where I am now. I believe I am quite young. Many people already know I'm 24 years old. However, I can say the amount of chart time and dedication I've been putting into this game is quite substantial overall. So that's a little bit of my background of my first hit came just after a month. And again, back then, 10,000 was a lot to me, and it is to a lot of other people also. After that, another big mistake many fall into. I had a message the other day, actually. I've always been communicating with people on social media, Twitter, Facebook. And when you do have such a big loss, all you're now thinking about, even subconsciously in your mind, is, oh, I need to do something irrational maybe to get my first loss back. So then again, there's no real trading plan there. What we like to do for many people, and again on the YouTube, we try and give people as much assistance as possible, is to create a structured trading plan first. And what I mean by that is we specialize highly in technical analysis. I've chose to stick with Forex because I do believe it's 90% technically pure, 10% fundamental, which I'll go into in further detail, and I'll pull up examples as well where we can relate this to the charts time and time again. So yeah, with that being said, technical analysis, you have to think of it as an art form, a creative form. Simplicity is key. I've had experience with all of the indicators, all of the robots. Market is very flexible and dynamic, and again, I guarantee many people can relate to this one. You find an indicator system, may work for 2 weeks, and even sometimes as well, you have a great system that may work. However, you're not actually following your own plan, and that's something that cannot be taught by anybody. It all comes down to self-discipline. Also, another one, when I did lose my first account, quite a lot of money to me. I was now trading out of desperation. I was now putting $300, $500 into an account and trying to flip it. again, unrealistic expectations. People go and watch films like Limitless and now think that they can turn $500 into $2 million in 4 days, and that's just way unrealistic. Say to yourself, let me get my $500 to 20,000, 30,000, then I might construct the plan. That's what I did, and that 20,000, 30,000 never came. So, yeah, overall, there's so many different mistakes. I do want to just like flick in between the charts to give you guys examples in which we can relate to as well, and some aspects of analysis and some trades I've taken myself recently, and so on. So you have to just compare trading overall to chopping the tree. You give somebody an axe, say here, you've got 10 days to chop down this tree. The amateur would start hitting the tree with a blunt axe, 9-10 days, not really getting anywhere. However, the smart person, the wise person, will spend 9 days sharpening the axe, you know, perfecting the craft in order to go into the market prepared. I've had a lot of losses before I became consistent, in which provided me, looking back now, some major hefty lessons and a lot of experience I can actually pass on to other people. So that's just a little bit about my experience getting into Forex, and I've never really had a mentor, okay, overall, and I actually thank myself for that now. Again, just because of the experience I've gained so far. However, it was very, very hard, painstaking. However, I'm quite a persistent guy overall. Please, if you are getting into Forex new, just please compare this to maybe, because it's such a professional field in terms of the freedom it can bring, the business aspect and the freedom it can bring, which not many businesses in the world can really offer. So please compare it to maybe, going down the route of getting law degrees, being a doctor, a lawyer. It doesn't happen overnight. It doesn't happen in 2 years either. It's happening 5 to 10 years plus, and so on, with a lot of hard work and dedication. So, yeah, with that being said, I'm just going to give you guys, so I know these guys want to ask me a few questions as well, so feel free to jump in whenever. But I know one of the first questions was, let me just pull it up. Right. Okay, portfolio. Me personally, what I like to trade overall is in fact the major pairs. Many of you guys are aware of the major pairs, etc. If you who are following us on Twitter and so forth. So I'm just going to start with a breakdown of how I actually analyze the market. Again, I've been through all of the indicators and so forth. Now I'm just going to break this down. I just use 2 moving averages. Some you might see me with Ichimoku, however, I don't really, because the way of all of my YouTube videos are constructed in a manner where somebody who is completely new to the market or completely new to charts can actually try and comprehend some of the things I'm doing. The way I'll break it down from top to bottom as well. I have specific, I'm not going to give everything away, however, I do have specific routines. For anybody who's new, many people, I'm sure you're aware of, the brokers and so on will advertise 100 plus currency pairs to trade, and a lot of people do think more is actually much better. However, due to my experience in this market, a lot of people often see me analysing and trading Aussie dollar, pound dollar, euro dollar, sometimes a yen pair, sometimes maybe an emerging or exotic pair or market. However, I believe if you play out maybe 2 or 3 currency pairs overall and just keep nailing that time and time again, sticking with your key levels, which are the foundation, okay, monthly, weekly, daily, coming from the top down, you will actually start to live out these pairs overall, and it'll become a lot easier and very, very simple for you on a daily basis to build yourself a routine in which all you have to really do is follow the key levels, read the price, apply some fibs, watch the lower highs, higher lows, etc. And even many people will get so sidetracked. I had a phone call the other week after one of my old friends, actually. He was like, Shaun, I'm getting into trading. I've been researching the MACD for 2 weeks. I was like, the MACD? Okay, then. I've been through the MACD. When the MACD doesn't work for you, you start applying the stochastic on top. Start to mix up the indicators. Again, many people probably smirking behind the screens now. Overbought, oversold. If you were to go and place a stochastic on the Euro USD last year, you did display oversold time and time again. If you go back to some of my technical Tuesday volumes, maybe even at volume 6 or 7, when we actually called the top in May 2014 and the downside targets, stochastics showing oversold. Thing was just sliding. So I don't actually believe in any indicators, okay, apart from on moving averages here. I use the moving averages, my select moving average, to actually, it's like the icing on the cake to all of the other strategies and confluences that I do put together in my head and on my trading plan. But think of trading in terms of confluences. Nothing will ever be 100%. The more confluences, the better, and taking data mainly from the monthly, weekly, daily time frames, and then transcending that data down into the 4 hour, 2 hour, etc., in order to be, get the overall bias and roll with the momentum. Okay, so I'm just going to show you a little bit of analysis right now. So let's go. Right, basically for you guys on the Aussie, I do believe that there's a good trading setup ahead. Now, first of all, I'm just going to go on with the weekly chart. I'm going to go in with parallel channel. Okay, got this nice parallel channel here. You just make that a little bit lighter. Okay, parallel channel. This is also an old 2-year ABCD Fibonacci. Now, for you guys who are very, very familiar with the Fibonacci, everybody has their own rules in Fibonacci. Some people trade back patterns, Gartley patterns, etc. I just trade the C to D retracement. I'm here for simplicity and freedom overall. This is what I've always, dreamt of. It's always been my ambition because I used to work full time. However, that wasn't the lifestyle for me. It was a hell of a journey to get to where I am now, where I can work wherever I want to. However, the simplicity is key, and also many people will be attached to the charts all the time. I used to sit down on 5-minute charts, 15-minute charts, and even 1-minute charts, okay? And what I was doing, I was trading, and many people may be aware of, pivot points, okay, with no overall, I didn't even really used to look at 4-hour, daily, weekly, trading mainly pivot points. I've got nothing against pivot points, if that works for you, by all means. What I found, okay, many people may find, is London session, you may be up nice and early, 7 a.m. with your coffee and your breakfast, and put a trade on, may make 15, 20 pips. Depending on your account size, you may take that and say, okay, that was great. However, you might just be still sat there at the computer. You really need to make a target. I'm not a big fan of making weekly targets in terms of pips. Reason being is because 1 week might make no pips. It gets to Friday morning and you're sat there thinking, oh, I've been at the computer for so long this week. I now need to make up for my weekly target. Again, trying to force yourself, and your psychology isn't balanced overall. I've found if you just ride the market, stick with your select currency pairs, very, very simple price action, even if you wait in 2 weeks for a trade, and I'm a great believer of looking at the bigger time frames, and whereas people are fixated on finding an entry for a trade, I'm fixated on finding where the currency market can go, the potential Aussie dollar at the moment, where it can go. And then once I've got that bias with the multiple confluences, I will then transcend that data, scale it down to 4, 2 hour, maybe 1 hour. However, 1 hour, we are stepping into intraday territory there, which isn't really a favored, module or task of mine in the market. However, yeah, so get the overall bias, and then it really makes it easy for us to scale down rather than, okay, many people are just fixated on the actual profit as well. From my personal experience in scalping and using 15-minute time frames, I would enter a trade, okay, and I wouldn't even look at the pips. Pips, this is the business of pips. So pips are what you need to actually aim for. I had a student today actually who was the biggest trade he's ever done was around 100 pips, and he's been trading for so long, so many different strategies and so on. I used to make 15, 20 pips. I wasn't happy with it. So I used to be looking at the money. We get people who say, I've just made £400, £600 off a trade. However, they could have made 3 pips with a mighty lot size. Get the pips consistently, and then the money will come naturally. So I used to wake up, make some money, and look at the P&L box, might be up 200, 300, and then you'll be sat there wondering, oh, should I take it? Should I take it? No real risk reward in play, and you might take that 300. However, you will probably let the trade run 600, 900 down. No plan risk reward. I'm a great believer of risk reward, and that you can only really apply it to technical analysis and a trade by breaking down the market in a structured manner overall. Okay, so this is Aussie dollar. Still want to make this a little bit light because I'm not really feeling this color. Give me one moment. Okay, anyway, I hope that everybody can see this. So Aussie dollar at the moment, again, we broke out of this range, okay? And we had a bearish engulfing. The MAs as well, I really love that when I'm range. Well, I'm not a range trader, but before a range is broken, they give me a checkbox and a tick box ready to, okay, this is getting ready to break. So we did this first leg down, swing up. Now, I only spotted this Fibonacci after this breakout here last year. Okay, this was 2014, came into the range, capped by 0.9500, consolidation, dojis, a lot of mess, 50-50, indecision, equilibrium, whatever you want to call it. Now, we were capped, first of all, 50%. I told you, I only found this Fibonacci here. However, even on a longer time frame, like the monthly, weekly, daily with a fib, I don't really trade direct fibs off them. I would use it more as a bias to go towards my fib levels, my extension levels, 1 and then 2. And many may be able to remember when we were trading Aussie, we had this breakout here. If I just highlight this zone, okay, we're just stepping back and reading the price, highlight the zone. If I really zoomed in and went down to the daily, we can see the MAs as well. Faintly, I know this isn't the best, but you can see the MAs crossed over and give us our overall bias. It was in fact a lower high in comparison to this one here. Now, with that being said, price action rules, a lower high, 75% chance we're going to come down and make a new lower low. And that's something that people just throw out the window because there's the research in the MACD, the research in the stochastic, they're putting them together and just playing games. Again, I really do rate TradingView for what they've done. This software is like some of the best I've ever seen. And I do encourage people to get off MetaTrader as soon as possible. MetaTrader can hold you back in so many ways, one being with the broker's GMT offset, in which what time does the daily candlestick close. Okay, I was held back with that for quite a while. The official trading times, 10 p.m. Friday, 10 p.m. Sunday, I believe that every other day should be, closing at 10 to stay in alignment, so we can actually take our trading decisions off. We're on the right platform, okay, and I really appreciate TradingView for that. So your tools are one of the main factors in trading. Okay, so carry on. We had the bearish breakout here on Aussie. We came all the way down. Target one's hit, and this bearish candle here is also a Maribozu. Lots of momentum behind that. And even here, I remember many people were buying. However, I stuck to my own guns. And another big mistake for people, I see this over and over again. I get invited to WhatsApp groups, Skype groups, I don't know, Twitter groups, Facebook groups. I used to be a big fan of Facebook groups. I'll give you a little, what I used to do, me and my business partner now, we used to get up every day when we were absolutely terrible, like 4 years back, put a few trades on, and we didn't know how to analyze whatsoever. We might luckily make 20, 30 pips in the morning, and we'll be itching our fingers thinking, I've got nothing else to do today. And on Facebook groups, someone will post a chart, Euro USD, wouldn't even know the guy's name, where he's from, got a track record, anything. I'll just look like, okay, that looks like it's a good sell. Sell that Euro USD from somebody else's viewpoint. And so many people can put thoughts and seeds into your head, even anyone on social media. I even tell all the students, don't go solemnly swear by anything I do or any of the analysis I put up there. You could easily spot something that I don't spot overall. Okay, so I do. A big tip is stay in your own lane, be that man on an island. You've heard us say this before on Technical Tuesday volumes. Okay, it's very, very important. So yeah, I've stuck with my guns on that one. 0.8400, you can go back and watch the videos, that was achieved. Next key level, as we were trading below that now, was in fact 0.7800. As you can see, the price, if we can just read the price here, we've come into a zone of the lower channel boundaries overall. Okay, I'm just going to put my horizontal line on here. This is a major key level. I'm going to go lower in a minute and give you a trading setup on this pair on Aussie, because I know many people like to trade Aussie. We did, in fact, around about a month ago, catch about 200, 250 pips on the Aussie buy side. And we did have this daily, we had a daily level. I'm going to show you a chart from top to bottom and how I'll break it down afterwards. I'm just going to give you this one taster of a trading setup at the moment. And yeah, this weekly close here was very, very, as you can see, only really closed about 50-55% of its overall up move. Once the next candle came, the bearish engulfing and dragged the momentum back down, the light bulb went on for me, and then I was able to highlight this zone here as a lower high from this zone. If that's a lower high, textbook, it needs to come and make a new lower low, which is in my head at the moment. And also my moving averages crossed over, however, they've dipped back down. They're now pointing to the downside. Let me just show you the monthly chart on this one. Monthly AUD USD. I know we got some fundamentals overnight, I think it is. I just have to double check on that one. However, a break to the downside here. My next major key level, I normally start from the monthly, find one official range, duplicate it, highlight it, come down to the weekly. I'll show you that step by step afterwards. It's a nice little technique for anybody new to trading. So I'm just going to take the top of that wick there as my range. Let me just measure this now. That's what I'm going to do. I don't need to keep going all over the place for support and resistance. I could say this is support here. However, logically, it isn't going to do that overnight on the next few days or even the next few weeks. Just look at the pip count. Now, taking this range here, I'm going to just clone that. I love the way TradingView makes it so simple. So clone that one. I've got my potential downside there, and I could even go the upside as well. I'm not going to do that just now. And you can see the confluence just here historically, all the way to 2004, 2005, 2006. I have that there. Let me just clone this because I'm highlighting my monthly levels. Monthly levels are the strongest levels, and as we go down lower, we will find the weaker levels. So monthly levels there, they're set now maybe for a few months. I don't have to come each and every day. I can enjoy my time. I can do what I want. I can check back maybe a couple 4-hour candle closes. It really depends on my setup. And then I'll come down to the weekly. Okay, and I really want to put on the weekly mid-range points. And sometimes I can do this with a Fibonacci. Okay, 263 attendees. Hello, everybody. With a Fibonacci, I can do it by eye, but I just like the way Fib's going to give me a perfect 50%. Now, I can take that off. There's one weekly mid-range. This is a great technique for anybody who struggles with key levels. Okay, and you'll see how accurate these things are. So yeah, I've got my weekly mid-range, I've got my monthly mid-range. If the pair comes out of these ranges, especially here, 8200-ish and 0.7, I can just duplicate it and add it on again. As I now come down to the daily, what I'll do, because some people fail, and a big mistake with some traders, the student I had today, he's been trading some of the Indian markets, and someone's taught him to pick out each and every high and low on, I can't remember, I think it was a 30-minute chart, and his lines were like 10 pips away from each other. And you're just going to struggle with analysis paralysis overall because you don't know which level. Okay, if it breaks this level, there's 10 pips to this one. It's just insane. It's going to drive you mad. So keep your levels nice and structured. As you just watched me do, even just with that 50% fib, just to get that mid-range there, you can clearly see on this daily chart, tap, tap, and it's a very, very significant level. So here you can see it is a lower high here, and we also have the shooting star formation. I'm quite proficient at reading candlesticks. It's something that I've studied for a long, long time. I even have some of my own little techniques as well. So Aussie dollar at the moment, we could maybe even say this is a lower high from this one. Overall, downside, can you see as the channel may line up with 0.7 over here, so there's confluence there. So I'm going to just remove that channel. That's all I really wanted to show you with that. So around here, if Aussie does roll over to 0.7, we can maybe watch price action to the upside. Now, on the contrary, so what we can do with this is I can actually see an inside bar formation. And if I could just chuck on, 1 second, let me just see what these comments are saying. Okay, so trade setup wise, bringing the key levels down, getting the overall bias and momentum, we can actually, I can see an inside bar here, which is just this one, the red and the green inside bar. Maybe Fibonacci might come in handy as well, from the shooting star down to this key level. Okay, get this thing out of the way. This key level here, significant high to significant low. As you can see, pinned off the 38.2, indicating there's quite some momentum behind us on this one. One more thing I like to do, if I've done the key levels nice and relaxed, I might take some time away from the market and then might come back and draw a trend line. It depends. So I've got this trend line coming down, which could potentially be a third bounce if I scale to the 4 hour. But this inside bar here, structured to the inside bar, I'm just going to scale down to the next time frame, wait for the execution. This key level here, we've got some fundamentals coming out tonight, I believe. Now, with these fundamentals, some Aussie, I'm not big into fundamentals, guys. I used to scalp and, all about spread widening and so on. I will be on my 15-minute time frame. and I'll be in a trade, and 9:30 a.m. will come, and I'll be shaking. I'll be going on various websites. What's going to happen here? And more or less, you're going to get a 50-50 bias viewpoint of traders, analysts, or whatever. Now, you're not really going to tell exactly what's going to happen unless that news comes out there and then. I've found with fundamentals, and I'll take you through an example after this breakdown of Aussie in a moment, that if you're proficient at reading the price first of all, and putting these foundational key levels down, then you can read the price and anticipate the move before the news comes out. There are ones, obviously non-farm payroll, etc., which I don't get involved in whatsoever. It's like it's a crazy day because people are just getting whipped left, right, and centre. A lot of manipulation and so on, which I just want to step back. Just go and enjoy your Friday afternoon. I wouldn't even endorse it. So yeah, trading, scalping, these small little moves off news events will scare 1 minute, 5 minute, 15, maybe even 30-minute time frame traders. However, the way we trade, we always have to let the trade breathe. You might have a strategy that's not working. You might have 20 stop outs in a row, and then you say to yourself, you know what, I've got too much of a big stop loss. Let me try 5-10 pips, and you're going to get destroyed there as well. So overall, we need to let the market breathe. I now do probably around 2 to 4 trades per week. I remember some days when I used to do 15 to 20, and it used to drive me insane. And again, it's going to burn your brain out, it's going to burn your eyes out, continuously looking at these charts time, and you're just going to start to see things that aren't really there. Don't get too intertwined in your mind, just into all of these fundamentals. What I do, Sunday, look what's out for the week ahead. If you have anything major, like the federal announcements, any central bank announcements, jot it down. Say, okay, Wednesday, 7 p.m, might have ECB. I have now until then to make a trading decision and judgment. It's also going to come down onto the market as well. Now, Aussie at the moment, as you can see, we've been range bound for a while. This has not been the best of conditions, as you can see. However, I am anticipating maybe a break to the downside, but I'm also ready for a break to the upside, which I'll take you to in a moment. Fibonacci here. I like this Fibonacci. Sometimes I go for the 27. It depends what it lines up with once I put my foundations in play. However, after that, yeah, this one's looking nice for me because it's coming near to my weekly mid-range. So 0.7320 downside target for Aussie. So let's just scale down to the 4 hour. Here is my setup. Again, trend lines, you need to know how to draw them on properly. You need to know each strategy and so on has got specific rules. If anybody ever offers you like a non-farm payroll strategy or any strategy that guarantees you to make 50 pips a day or something like that, they're probably just going to lie to you. Trading is all about confluences. What I would do, I would probably look at 5 to 7 different pairs, break them down as I've just done, and then I will select 2 out of the 7. I don't like putting more than 2 trades on at a time. Many traders fall into the habit of too many currency pairs, and if I was to say to you, okay, you got 15 currency pairs up there, please tell me where this one's at now and what the key level of monthly resistance is on this one, and you won't be able to say. So it's going to really benefit yourself just by keeping it minimal, okay? 1 to 2 markets as a beginner, as a newbie, and even some experienced traders. We're all going to go through bad patches and bad habits, and you may doubt yourself. If you start going through doubtful times and then you want to start paying, for signal providers, you might want to change your strategy completely. Just blank chart, read the price. Key levels are the main thing. Practice putting your key levels on there. You can use that little bit of guidance I've shown you there, and you can see how powerful that is. And just, again, less is more. So here, the inside bar base, I'm just going to remove this just to aid confusion. The inside bar level of support is just here. So let me just highlight over it once more. If we get a break of this on the Aussie tonight, I always compare a 4 hour to a daily to see how that daily closes, okay? And my moving averages will cross over first of all to get me on my toes. Now my moving averages haven't crossed over yet. It may well break to the upside, okay? And however, yeah, downside looks probable because there's a lot of weight, from the top. So again, always look at the monthly, weekly, dailies, get the overall bias and go with the flow. So Aussie, a break of this key level here. Stop loss placements, we're looking just to probably above the box. And many of you guys know risk reward. Anyone struggling with risk reward, start looking at longer time frames. You don't have to use 200, 300 pip stop losses, 400 pip stop losses. Be smart about it. Use your brain and think, okay, can I take this overall momentum and can I make it worthwhile in smaller time frames? So let's say we open the trade here, stop somewhere above there. Target level, let's take it to this weekly mid-range. That's a 1 to 1.4 risk-reward ratio. Okay, 1 to 1, I would never go backwards. People trade 2 to 1, etc. That's completely up to you. However, for somebody who's new to the market and just trying to get onto the path of analyzing on a consistent basis and it coming through, then always make sure it's a 1 to 1 risk reward. So you see how I've stretched that. I already had a target in mind before I even looked at my entry. So just bear that in mind, guys. But there's a setup on Aussie dollar for you all. Again, it can go either way. However, I am favouring the downside. And I do believe if it does break 0.7550, we might see a sudden rush of momentum to the downside. If it breaks this key level here, I think 0.7 is on the cards. Okay, so that now expands into a 1 to 3 risk reward, say. So I hope that helps. So yeah, that's just a little breakdown on Aussie now. I think, 1 second. Okay, I'm now ready for the questions.
So yeah, hi Shaun, hi everyone. Sorry for being late and for the technical issue I had. So yes, thank you so much. Thank you for the interview, for the overview of your analysis. Yeah, I think today we will make the webinar a bit backwards. So we start with your analysis, then we go with the questions, and then I'll tell a little bit about EXANTE and changes that we had over the last couple of weeks.
Okay.
So yes, thank you, and of course, we already have some questions from the audience. For instance, we have a question from Nathan Richards, and he's asking what do you think about leverage in trading?
Okay, leverage in trading is something that I do make many people aware of. I fell into the traps before of using high leverage. I'll probably just stick to 1 to 100, 1 to 200. It depends on your broker as well, because I've had some people, we do the money management 1 to 3, exactly how to work that out. And you could do your 1 to 3 risk reward calculation. I know a couple of the students are in here who've had problems with that as well. Depends on your broker. You do the 1 to 3 risk reward, you're ready to place your trade. However, you calculate your stop loss on, let's say, your broker or whatnot, and it doesn't really match up. It's a little bit less or a little bit more. I think that comes down to leverage. However, I'm not a fan of overly leveraging any account. The highest leverage I've seen is 1 to 2,000. However, just focus on your actual account size rather than trying to leverage it God knows how many times. So with me, I'll personally just stick to that 1 to 100, 1 to 200. I do know US have restrictions as well. But I know a lot of people personally who lost a hell of a lot of money due to highly leveraging their accounts on the Swiss franc move on the 15th of January as well. So I'll just be careful with that and stick to mainly low leverage, 1 to 100, 1 to 200. I think I've lost, you've lost the audio.
Yeah, we do have some viewers from US.
Yeah.
Yes. Yeah, we do have some viewers from US, so they do have different leverage standards. But in general, yeah, it makes sense to keep it safe. So yeah, some of the other questions we have. It's a question from my side. You have told that you basically trade the major pairs.
Yeah,
so
that's correct.
So you trade USD and Euro pairs. What do you think about the emerging markets? What is your view on them? How trading on them is for you, and maybe what are some unusual for you trends that you see in the markets, and what would be the ways that you would think to diversify your portfolio?
Okay, yeah, with me personally, as I say, I specialise, I know these pairs myself, so that's why I think, there's a great amount of tips for me to make on a consistent basis on what I know. However, in terms of emerging markets, maybe with some exotic currency pairs, I do often dabble into them. Some of my favourites like GBP AUD, Euro AUD, which I can show you guys my outlook on. Actually, on my TradingView history, I think it was back in December, I've done some exotic pair analysis overall. For other markets, it comes down to your preference as well. Someone's asking me, why don't you create a fund? Why don't you start trading, I don't know, equities, bonds, futures, etc. Well, for me personally, I don't think I need to go into that. I enjoy my time too much, and it took me, a lot of time to get to where I'm at now. Maybe in the future, personally. But I just tend to stick to what I know. It's not of my interest to go into any other emerging markets, and I'm not too big on economics as well, as you've seen in my analysis and some of my videos. I'm not too big on economics, and I'm not really a fan of it, to be honest, overall.
it was interesting for me to see how you do incorporate fundamentals into your analysis. So it's nice to see a trader who takes into account both the technical side and the fundamentals. So I did have a question to you regarding that, but you already answered it, showing that there are some moves that are influence with the fundamentals, but it's mostly the short-term thinking. Also, I wanted to ask you, when you analyze where to move your trades, and so how long periods you take, how long historical data you take into your consideration?
Okay, cool. Yeah, so in front of me now is the USD CAD. Nice little setup there, short setup due to some Fibonacci and so on. But as I displayed, many traders you can pick up a lot of bad habits, and a lot of the bad habits, it took me so long to transcend myself and my thinking and my mind from these smaller time frames where I'm looking at maybe even just the last days, high and low or whatnot, to actually looking at the whole scale of things. Now, the bigger picture is important, not just in the market, but in all aspects of life. Now, if you look at this USD CAD, I did this analysis earlier on, and the historical data, that's all I can get. So that's what I've got to work with. You have to work with what you've got. However, the key levels over here, as you can see here and here, are enough for me to actually make my trading decisions based off that key level. And then, as I displayed again on the Aussie, find that one official range, duplicate it so you're ready for both scenarios, and then take the weekly mid range. Again, I've got other ways. However, as mentioned too, I like to simplify it for those people that are new to the market. I don't like to go into complicated things whatsoever, because we don't need to do that, if that makes sense.
It does. I know that you are also very considerate of the psychological aspects. We have an interesting question from Arun Singh, and he's asking, if NFP is on Friday, would you wait till Monday to do your analysis, or would you still do it on the weekend, knowing that the market may correct itself?
Okay, good question. Good question. Actually went through this yesterday. Well, yeah. To be honest, non-farm payroll, I would wait until Tuesday personally. Okay, because even this morning I wasn't too sure of the bias maybe on the Euro USD and GBP USD. However, just a few hours later, I've got actually something decent that I want to maybe show you guys later on. But I will probably just let the market cool down. Okay, even with standard fundamentals, say GDP figures, etc. If you have a trade set up and you can see something coming out which is may damage the viewpoint or maybe even destroy your bias overall, I would give it a few hours. But in terms of non-farm payroll, I don't even do my analysis on a Sunday anymore. I would wait till Monday afternoon, Monday night, and I've only done my analysis today from non-farm payroll. So yeah, it's Tuesday. Let Monday fly by. There's no rush. The market's always going to be here. And again, the timeframes that I use are more suitable for a calm, relaxed approach to trading.
While you were talking, we received another interesting question from Alex V. He says that he has been following you for quite a while, and he saw some of your accounts that you're showing, and he's basically asking you that you're saying a lot about the risk reward, which is an essential part of the trading and very important for the ones who started. So he's asking, from the 3 accounts which you show on my FX book, as a proof that you're a profitable trader and then that you're doing good, you show the ones with a quite high risk. So in fact, what is the usual risk that you use? And yes.
Okay, the My FX book and so on, that's like a quick example. I put some money in them accounts now. I've got multiple accounts. I've got one myself. I've got one joint with my business partner. I had one in Alpari, which went down, which was quite a substantial amount of money. With that, it was more of a example of what can be done in the market, even though I don't endorse that. That's why I stopped doing the videos of profits and so on, because I had people trying to mimic exactly, these big wins. And again, if you have these big wins installed in your head and you're trying to trade and match them levels, then you're going to probably liquidate your account real fast. Now, on our personal accounts, we actually have a structured routine, whereas some trades, it depends how many trades I have on, I would only risk 1%, 2%, or maybe even 3%. I would only go for 3% if I have 4 or more confidences for a trade, and I wouldn't enter any other trades. In terms of risk reward, like this USD CAD setup here, I am probably going for around 500 or 600 pips. If I risk 2% on this, I'm probably going for a 1 to 3 risk reward, and looking for 6% on this actual return on investment. I always like to think of each and every trade as a say if this trade here, okay, there's a potential for 600 pips. It's not going to happen overnight. You have to consider the average daily range for each trade. If this happens in 2-3 weeks, I'm just going to divide that by how many weeks. Let's say 200 pips each week, and it's going to yield me 6% this one trade. And you have to look at it as, will this trade get me fired from an investment banking job? Will this trade look good in my journal? And I'm a strict believer in keeping a journal. It's what separates the pros from the amateurs. So journal, make sure it looks good, and look at it over as a medium-term investment, and just try and compare it to maybe property. Might get 7 to 9% over a year in property with a lot of hard work, and also an individual savings account as well, which is 3% a year, which is quite diabolical overall. So even if you're making consistently 5 to 10%, it's also going to come down to capital. Me and my business partner trade at a substantial amount of capital, and we would be quite devastated if we lost over 3% on each individual trade.
Obviously, yeah. Thank you. I hope this answers the question. We do have some more questions, and we have actually more questions than we will be able to answer. So sorry, guys. Yeah, we have quite a general question. What Fibonacci levels when buying and selling? What would be the most important ones?
Okay, well, what you can see right here, standard Fibonacci, we're looking at 61.8, which is my favorite Fibonacci. A lot of people don't actually understand what Fibonacci is, and again, I always go into the actual sequence. It's not actually derived from the market or any market. Fibonacci is a natural pattern and sequence in which somebody's applied to the market. I can't reveal everything of why I use all of these levels. However, I can just say the retracement levels, because I've said it on the video time and time again, 61.8 highlighted green, that's my favorite, and that's why I've got this USD CAD set up right in front of me here, and the 15 to 38.2. The only real retracement. I know people use the 23, etc. However, I've seen this work time and time again. Again, you can go back on the Technical Tuesdays, volumes 1 to 33, and you can see the accuracy of us using the fib and get a little bit more insight into how we apply it as a confluence with many other trading tools as well, and just reading the price action overall.
Yes, thank you. We will keep getting questions. Could you tell me what is your favorite pair? Maybe you could tell why. I think you already mentioned the euros and everything, but if you could do a forecast on your favorite pair, like a short one, a brief one, yeah, I think our audience would like that.
Okay. Could you just, do you want me to? Can you just repeat that? Sorry, my headphones was crackling.
Yes. So your favorite pair.
Okay.
And maybe you could give a.
Oh, yeah. Okay. Can everybody still hear me? Because my headset is just a little bit crazy. Okay.
Yes.
You can hear me. Okay, so my favourite pair is Aussie is one of my favourite pairs. However, I can give you a breakdown because I'm in England, the UK. GBP USD Sterling is one of my favourite pairs as well. So as you can see here, nice blank chart. Now Sterling is a favoured pair of not just me, but many other traders as well. Now from the monthly chart, okay, I'm just going to do a quick recap of the last 12 months. Sterling, again, you can watch on my videos and so on. And whereas we actually called the top on Sterling here, okay, with multiple confluences to the downside. So we had that, and as you can see here, on the bigger scale of things, we didn't actually bypass the 0.71, maybe tapped just below 0.72 level for a number, since this huge crash right here. And as you can see, this bar, a lot of volatility and momentum through this key level. So you can often expect many of the, these such key levels, when the price does revisit it, you can maybe expect a similar momentum because it's such a huge supply level. Okay, now with this one, I'm not going to draw all of the key levels on there. However, I'm just going to highlight a few things. Now with this, I know this key level across here, 0.5200 is a key level. Last week, again, reading the momentum from the prior week. First of all, the last month, sorry, 1 second. Last month, we could say that's a doji / spinning top. It's indecisive. Weekly, again, last week, very, very indecisive. However, my MAs have crossed over and whatnot. I can even maybe put a trend line from the top to the bottom. Okay, top to the bottom there. We know we've respected that and we broke above that. Daily, okay, take you to the actual trading setups on this pair. Now, daily, right, we did, in fact, have some shorts on this, and I know some of the students actually caught this as well. Bearish engulfing here, mini little tweezers up, bearish engulfing straight through. I was anticipating this level to be achieved, 1.5080, 1.5050. However, I don't actually see pound actually revisiting these levels at the moment. Fibonacci again, I will try and just throw it on, apply it where I can. Here we go, A, B, C, straight off to 50%. And if you can also take a minute to look at the higher low, and again a higher low here. 1 bullish engulfing, 2 bullish engulfing. Current daily candle is looking a bit like a hammer. However, the day hasn't finished yet. And again, always wait for the candles to close. Stepping down to the 4 hour, if that is a 50% retracement, a good trading setup may look something like this. Okay, we have this here, 1, 2, 3. Looks as if the moving averages have just crossed over and we've just broken above that trend line. We've got the support below us and we've got monthly major barriers below us as well. So always thinking about what's above, what's below. Now, in terms of daily, I think, okay, 1 second. This daily here, I can also see an inside bar, which is this red one. There's the mother candle, and then we also have this one here. So let me just change the color of that. Scaling down to the 4 hour for an execution on here. We also, popping our head above it, I wouldn't consider that as a nice firm break because we are, I want some more momentum. However, we broke the trend line. MAs have crossed over as a tick box warning. I would now wait for a little bit more momentum to take us further and watch that daily close. So I'll probably watch the daily close tonight. I normally look at the charts around 10:30 at night, 11 before I sleep, because I always got charts in my mind. But yeah, I would wait for a little bit more momentum and a close further up here. And I would anticipate long entries for GBP USD with targets. Going back to the daily, the Fibonacci extension target of, and I've said this for quite some time now, it's displaying 6147. However, I would go for 6100, just around here. I'll go for that key level. And as you can see, historically, it's quite a substantial level. So anticipation overall. Wait for the daily close. A little bit more momentum to the upside. Buy positions all the way up to 1.6100. However, guys, depends on your trading style. Are you psychologically prepared to actually hold a trade that far? Or do you want to maybe do split orders or take profit halfway? And I always endorse moving stop loss past break even, because there's nothing worse than being in a winning trade. A couple hours later, looking back, you've been stopped out. So it's always handy to just move your stop loss past break even. Maybe after me, I do it after maybe 80 pips or one of my next key levels have been broken and trade it up. So with that being said, rather be stopped out in even just a few pips profit rather than going from top of the world to wanting to go jump off a cliff and then rushing into revenge trading, etc. So that's my breakdown on GBP USD. Last thing I want to just note is this was the last higher high, so we're going to higher high, higher low. Going to maybe anticipate a new higher high, which is what this Fibonacci extension's good for. So that's my breakdown on the pound at the moment. Don't take it as gospel. Please just use it in combination with your own strategy and so on, or it can completely turn the other way and melt, and then I'll have to rethink the whole situation. So I hope that helps.
Sure. Yeah. Thank you. Sure, guys. Don't take it all as just the directions to move in. Take this as analysis of one person who has his own opinion, and yeah, this opinion has its reasons. So, thank you so much, Sean. We're actually wrapping up. We've had a great hour.
Yeah.
I think our audience found it interesting because we've got lots of questions, and I will try actually to send them later to you, maybe, so that
Yeah.
you can address some of them. Just to wrap it up, I think we could finish up with the topic of the webinar. So what, in your opinion, are the biggest traps that the new traders fall into? And what are maybe some that the existing traders, the ones who are already experienced, they still fall into those troubles? So what would be those, and what is your opinion, suggestion, how to overcome them?
Okay, first of all, it's a pretty tricky one. However, first of all, it's obviously going to come down to education. Me personally, back in the day, I was learning off so many different sources and trying to combine so much information together, in which I just had so many bad habits. Keep it simple, okay? And again, think of trading as a business overall. For instance, if you, let's say you bought a bar, for instance, maybe 200,000. A business, a physical business, you wouldn't really expect to be profitable for what, maybe 3 years, 4 years. However, trading is no different. And again, every time you sell something as a business, everything's invoiced, everything's logged. A lot of people, and I've seen it, will trade like they're on a merry-go-round, and they won't log all of the trades. I always, even when I'm doing posts on social media, it keeps me occupied. I enjoy it, and I'm also saving every trade setup I have. And even with training, any kind of training is going to take a lot of effort. So in terms of that business, running a bar, people are going to pay, and learn how to be a bartender overall, staff, etc. A good tip is to always just consider your losses as actual overheads in this market. Okay, so there goes the rent this week, there goes the rent this month, and so on. And again, unrealistic trades on demo. We always say to a lot of our students, just go to like a 500 account. You're not going to make much money. However, it's the percentages and the pips. Percentages, pips, realistic trades, realistic risk reward, simple analysis, in which I've just displayed to you. You've seen it time and time again. This stuff comes through. And again, if you've got all of these bad habits, saving your work, annotating on your work, and looking back at your work, especially when you've had like maybe a bad streak or something. If you can look back at your work, because many people don't even save the work, these are like your invoices and transactions in the market from you and the market. And you can now look back at these trades and say to yourself, you know what, that came through nicely. This is just a little bit of a bad patch, and so on. So a lot of experienced traders as well. It's one thing in actually creating the mindset, but it's another thing actually keeping the mindset and not getting sidetracked by losses, outing yourself, and always stick to your money management as well. So yeah, overall, don't place any unrealistic trades and then go to live money, open a real account, and you'll get destroyed like me. Lose your first investment, and then everything from there is just a snowball effect of wanting to get that initial investment back overall.
Forgive me for jumping in. I just want to mention TradingView is a great place to do everything you just mentioned. We got sim trading, and what you should do is whenever you actually try to place, thinking of placing an actual trade, place as an idea. It's saved to your profile forever. You can go back a week, a month later, see how it performed, and decide if it was a good idea or not, and why. And discuss with your friends. And what this is a permanent journal that forces you to be honest with yourself, first and foremost, right? Which I think is exactly what you're talking about. So publish your potential trades as ideas, and then see how well you did.
Yeah, I still do that to this day, and all of our students actually are using TradingView. It's completely up to them if they want to do an in-depth description as to why they want to enter the trade, what target levels you're looking for, and again, so you can look back. If it only hit your first target, appreciate it, and rejoice in what happened and how much money you made, profit you made, and so on. And the honesty with yourself is a big one. Like me, I used to be on demo and whatnot, and I would have a winning streak. I would log my trades. However, I'll make a mistake. Let me just reset that demo and you don't really learn from it. So you have to really be really honest with yourself overall. That's probably one of the biggest ones. And also the game will actually change when you start going from 250 wins to 5,000, 6,000 wins as well. So you have to actually be prepared to handle that kind of money. Okay, so that's another big one.
Yes, I'm sure that our viewers have learned something from today. And yeah, just to finish up, unfortunately, I couldn't join at the beginning to tell you just a little bit about EXANTE. Yeah, so the guys were telling that TradingView can help you get the ideas and share the ideas and check how they can work for others and for you. And EXANTE, I think, would be the place to actually take it all to reality, because we as a brokerage, we offer both demo accounts and the live accounts, and the charts that you can see on TradingView, you can actually trade them with us. So we offer forex, we offer stocks, options. You can just go and see it for yourself. So yeah, feel free to download the demo platform of EXANTE and take a view. We have just recently added stop loss take profit to our web platform. So yes, what's interesting is that we have a web platform, PC platform, as well as platforms on your iPhone and Android. So yeah, we're trying to be there, and we're trying to support all of your needs 24/7. So yeah, just get in touch with us and try us out. So thank you again, Shaun. We are coming up with the next webinar shortly. We will let you know.
Okay.
And yes.
Okay, brilliant. Yeah, I've enjoyed it. I hope people have took anything they can from it, whether that be a little bit of advice or any of the technicals and so on. So yeah, if anyone wants to keep up to date with us, on the Instagram, Astrofx, or YouTube and so on. But yeah, back to the charts, and I appreciate it from you guys, and hopefully we'll keep in contact.
Thank you, Shaun. Thank you, everybody, for joining. Yes, we will post the webinar for those who asked and who came in later. We have recorded the webinar, and it will be posted on our EXANTE Brokerage YouTube channel. We'll also try to post it on our Facebook page. So just, keep posted, keep following us, and just see all the news. Thank you, Shaun.
Brilliant.
Have a great day, everyone.
Angie, I'll see you later.
Thank you. Bye.
Bye-bye.